Cnbc TV 18, celebrating 15 years of leadership.
Our guests who join us, and we solve all of your personal finance and stock queries. So we have Vishal Malkan of malkansview.com to answer all your stock queries, and Hemant Rustagi of Wiseinvest Advisors to answer your personal finance queries. Gentlemen, afternoon to both of you. Let me start off with the big gashes that you're seeing in so many of these broader market stocks as well, not just HDIL, which is down 8%, but many of the names which have been very good wealth creators in the last many weeks and months are seeing some profits getting booked out. Britannia is case in point. That stock is now down almost about 6% volumes picking up over there. Jet Airways is down almost about 5% over there as well. The volumes are quite high at this point. Names like Arvind, Marico, Heidelberg Cement, all of these stocks are down anywhere between 4 to 5%, and now it's getting worse for the indices. The Nifty has lost more than 100 points, so triple-digit cut over there. The Sensex is now inching towards almost a 400-point cut. It's 375 points right now gone on the Sensex straight away, and a lot of pockets are under pressure. Reliance, by the way, is your top loser, down 4.5%. We have an SMS that has been written to us from Pune. Rekha writes in, and she wants to buy a term plan for her family. She already has invested in the LIC life cover with a total sum assured of 10 lakhs, and she wants to know about the other term plans. What would your view be?
Well, I think I would say that it's a good decision to buy a term plan, because if you were to compare a term plan with a traditional plan, one, the traditional plans are quite expensive as compared to a term plan. The second is you don't get the quantum of sum insured that you require, because term plan is a pure risk product, so they are much cheaper. Of course, like I said, it's a good decision to buy term plan. She has to choose the right product, and also the quantum has to be right. So as a thumb rule, I would say that that sum insured should be at least 10 times over annual income, and if there is any other liability like a housing loan, that amount should be added to that. One term plan that I recommend to her is HDFC Click to Protect, and I would recommend that if she can buy online, because buying online will be even cheaper than going through an agent. So she can buy HDFC Click to Protect.
Okay, Rekha, that's the advice for you. I hope you were listening. Definitely go in for a term plan, and the one our expert has recommended is HDFC's Click to Protect. On that note, we need to take a very quick break. We'll come back in a bit. When we return, we'll focus a little bit more on what's spooking the market so much this afternoon, as well as answer the queries sent in by our viewers.
Next up, we have a caller. Satya calls in. He's 37 years old, and he calls in from Pune. Hi, Satya.
Yeah, hi. Actually, I'm planning to invest lakhs per annum in mutual fund.
Okay.
Please advise me the best mutual fund product currently.
Okay.
I have a special inclination towards Birla Sun Life.
All right. So he wants to invest into the Birla Sun Life Top 100 fund, and he has a certain amount that he has, taken out for regular investments. Hemant, what's the call on what he should be doing now?
I think the first thing I would say that since the intent is to invest for the long term, I think he's chosen the right asset class, equity. Of course, there are two ways of investing in equity. One is you can go and buy stocks directly. The second is invest through mutual fund. Buying stocks directly can be a bit tricky if you're not aware of how to select stocks and when to exit. Therefore, I think it makes a lot of sense to invest through mutual fund, because you have full-time professionals managing your money, and there are different strategies that you can adopt. You can invest lump sum and also invest on a regular basis. As far as the fund is concerned, I think he has shortlisted Birla Top 100. I think there are better options in the same category, and also I think within the other segments of the market there. My recommendation would be that if he likes Birla, he can look at Birla Equity Fund, which is a pure large cap fund. The performance of that fund is much better than Birla Top 100. The other two funds which I'm recommending for him is ICICI Value Discovery Fund and Kotak Select Focus Fund. But I think, as always, I would say that if he wants to invest lump sum, he can go ahead and invest lump sum. But my recommendation also would be, in addition to that, if he can invest some money regularly, not necessarily through SIP, whenever he has some additional money that can be put aside for long term, he should continue doing that. So I think a combination of long term investment as well as a disciplined approach of investing through mutual fund can really allow him to build a good corpus over a longer period.
All right, fair enough. But it's time we focus on the market, because the mid-cap index is now down almost